All right, hello. We are going to go over Chapter 17, homework, or the assignment. Let's take a look at it. Remember, it's unlimited attempts, so you can do this many times if you'd like. All right, so this assignment is designed to help you get ready for the project. So you will be analyzing this financial statement information here to calculate specific areas of importance. So first thing we're going to do is calculate our number of shares that are outstanding. So we are going to take our, we got to do the formula. So we're going to take our common stock here, all right, and we're going to be doing it for this year, which I believe is column B. Yep, B. We're going to take our common stock and we're simply just going to divide it by our par value of common stock per share, which is that $20 per share. So our 57,500 number of shares outstanding, and as you saw by the flash, it said it was correct. It's going to give us instant information. If you screw up too many times, I think it'll give you the answer and you end up losing points on that. So hopefully that won't be your case. So this next one is the current ratio. We're going to take current assets and divide it by current liabilities. Excuse me, I'm sorry, I jumped ahead. We're doing gross margin percentage, and we are going to take the gross margin and divide by sales. So we're going to come over here, hit that equals sign, and we are going to find our gross margin, which is right there. And we're going to divide it by sales, which is right here. We're going to hit enter, and yay, we got it correct. Now we're going to do the current ratio. So we're going to take, now listen, it says rounded to 2 decimal places, so you got to do this formula for every single one that says for rounded. I hate this, but there's no way around it. So we're going to do round, and then we are going to do our math. So we're going to round our total current assets, and remember doing it for this year, divided by total current liabilities. Okay, now you put the comma there, and it said it wanted to round to 2 decimal places, so we're going to put a 2 there to tell it we're going to round to 2 decimal places. And the parentheses, and we got it correct. So, sorry, it's down here. There's not a whole lot of room on here, so you may have to bounce between the two. The next one is the acid test ratio. We're going to take our liquid assets and divide by our current liabilities. So once again, it does say to round to 2 decimals, so we're going to do this. We're going to round, and then we're going to say we need all of our liquid assets, which cash is a liquid asset. We're going to add that to marketable securities, which is a liquid asset, and accounts receivable is considered a liquid asset. Now, inventory and other current assets would not be included in there. So we're going to round that mathematical equation, and then we got to divide by our current liabilities. So I actually need to go put another pair of parentheses here to make sure this works right. Come on, little guy. There you go. All right. So now we've added those together. Now we're going to divide by our current liabilities here. Okay. And again, remember, comma 2 to tell it we're going to round to 2 decimal places. End our parentheses, and we got it there. All right. Accounts receivable turnover. Okay. We're going to say it's going to be sales divided by average accounts receivable. So the first thing we need is we're going to need our sales. So we're going to come up here to our income statement, find our sales, and then we're going to divide it by our accounts receivable average. So we are going to take our accounts receivable here plus here. So we're taking our beginning and our ending year basically, which beginning year was last year, ending is this year. Adding those together, and we're going to divide it by 2. And that's going to give us the accounts receivable turnover. And once again, remember, we are going to do it to 2 decimal points. Hopefully I got that formula right, otherwise it's going to yell at me. You can already see I didn't because I didn't put the round there. Got to remember that, otherwise it's going to be very angry. And it looks like I messed up some parentheses. Yeah, right there. See, these formulas are very tricky, and you got to make sure before you hit enter, look at it and make sure it's done correctly. So otherwise it'll give you the error, it'll say you've got it wrong. And thankfully that bully doesn't come out though and say, see, we told you should have been reading more. Anyway, average collection period. We're going to take the total number of days. So first of all, rounding again, we're rounding to the nearest whole day. So we're going to round, and we're going to take the 365 days and we're going to divide it by our accounts receivable turnover. And then we're going to round it to 0 places, so they'll give us the next whole day. So we got 54 days. Our inventory turnover, and again, these formulas are in the thing I gave you in class, that little paper I gave you. So our inventory turnover ratio is going to be the cost of goods sold divided by the average inventory. So we're going to round, and we're going to come up here on the income statement and pull off our cost of goods sold. All right, and then we are going to divide that by our average inventory. So we're going to add this plus this, and then we're going to divide that by 2. And I think I again left off a parentheses that I needed, so make sure that that does the math first. We're going to we're going to add the inventory together, then we're going to divide it by 2, then we're going to divide cost of goods sold by that number, and we want to round it to 2 decimal places. Whoa, see, that's what happens. I probably forgot something in there on the formula. So it yells at you right there when you mess it up. Okay, right. All right. So it's F8, looks like, for cost of goods sold, and then we're going to divide that by, this time I remembered that, inventory plus beginning and ending inventory. Then we're going to divide it by 2, and we're going to round it 2 places. There we go. See, you just must have typed something in wrong. I'll have to rewatch this, see what I did wrong. Average sales period. All right, we're going to take the days in the total year and divide it by the inventory turnover. So again, we're going to round it. We're going to take 365 and divide it by what we just calculated. Oops, don't put that parenthesis yet. We're going to round it to 2 decimal places. No, rounded to the nearest whole day. So we're going to go ahead and hit that to the 0. 102 days. Okay, debt to equity ratio. We are going to take, and we're going to round our total liabilities, and we're going to divide it by our total equity. Remember, do it the current year, don't do it in the prior year. I'm going to round it to 2 decimal places. So our debt to equity ratio is 1.05. Times interest earned. That's going to give us our net operating income divided by our interest expense. And we are rounding to 2 decimal places. So let's take our net operating income. Whoops, that's getting out of hand. Net income. Actually, hold on. Net operating income. So you got to make sure you get the right one. You have your net income before taxes, and then your net income. We want the net operating income, which is going to be income before interest and taxes. So you take that and you divide it by our interest expense, which is on the next one. And see, I forgot to do this stupid rounding thing. Let's try it again. Oh, I hate the round. Oh, see, I was already going to do it without the round again. So let's try this again. Times interest earned, again, is net operating income divided by interest expense. Net operating income divided by interest expense, rounded to 2 decimal points, and they don't yell at us anymore. So remember, it's pretty finicky. All right, the next one is book value per share. So we're going to take the total stockholders' equity and divide it by the total number of shares outstanding. Remember to round it. So rounding net income, and this one's our net income there, and divided by our total number of shares outstanding, rounding to 2 places. Oh, goodness, what did I do? It's going to take my firstborn child. All right, book value per share. Let's try it again. Round. Oh, that's because I did it to the wrong one. We are on book value per share. Total stockholders' equity divided by total number of shares outstanding. My bad. Forgive me, please. There we go. Earnings per share. This one is net income divided by total shares outstanding. So now we go get net income. Oops. Round that one divided by the number of shares outstanding. 2 decimal places. Okay, this one we're rounding to 3 decimal places for some reason. So we're going to take the dividend payout ratio, which is your dividends divided by your earnings per share. So we're going to go up and grab our dividends after we type in round. So there we go, our dividends per share divided by our earnings per share, which we just calculated a bit ago. Remembering to round to 3 decimal places for whatever reason. So 22.9%. All right, dividend yield ratio. It's going to be your dividends divided by your market price of shares at the year end. So we're going to take that, we're going to round, and then we're going to do our dividend divided by our market price of shares, which is, where are you? There you are, oh, right below it, sorry. And how many, I think we're going to 3 on this one too. Yep, 3. For whatever reason, don't you love it when it doesn't even show the 3 decimal places, but darn it, it's what we're rounding to. Thank you, McGraw-Hill again. All right, price-earnings ratio. We're taking the market price of shares at year end and dividing it by our earnings per share. So now we're going to take market price of shares per year end and divide it by our earnings per share, which we calculated up here. And we're rounding. Now they decided to go back to 2. I guess they were bored with 3. There you go. All right. I've completed this question or exhausted all available attempts. Hallelujah, there you go. You don't even have to check the work button because it already tells you if you did a good job. All right, next question is going to be very, 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 very similar to what we just did, so I'm not going to waste your time going over it because all you're going to do is the same thing. You're going to calculate your current ratio, your receivables turnover, etc. The only one I haven't shown you is the debt to assets. I'll bet you will have a hard time guessing what you're supposed to do there. Yes, that's right. You're going to take your liabilities and divide it by your assets, remembering to round. So I'm not going to show you this one just because of that. It's just too easy. You just got done doing it, rocked the world, and now on to the vertical analysis for profitability. We are going to take here to calculate our vertical analysis on these 2 segments. We have an apparel segment and an equipment segment. So what we do is we're going to take our first sales here, or net sales. Okay, we're going to divide that by, again, our net sales. Oops, I forgot to do divided by our net sales. And then we're going to multiply that by 100. Now, I don't remember seeing anything in here about rounding, but I'm sure I'll get yelled at if I don't. But we'll just tempt fate today and see what happens if this works out. Let's hope it does, okay? So we're going to lock this second B9 cell using the dollar signs. Oh, look at that. It says it's correct. But I wasn't done. Thank you, sir. I wasn't done. But, oh, I guess I am. Normally you can just now drag it down, but I don't think it's going to work now because it didn't give... Yeah, I know it's incorrect. Thank you. It's because you guys didn't give me the opportunity to fix my mistake. So let's do it going forward correctly. B10 divided by B9. Remember, this is a vertical analysis. Better use my mouse because if it doesn't, then it's going to yell at me again. Okay. And then we're going to multiply it by 100. And let's find out if we got that one right. Okay, so if you get the formula correct, like I did on that second attempt, then you just drag it down, and the whole thing is correct, and we don't have to waste our time. So now we're going to do the same thing here. We're going to compare both of these segments. We're going to take this one here, net sales divided by itself, again, but this time, again, we're going to lock D9 so that it doesn't... get squirrely on us. Let's put some parentheses around it just so that there's no question what we want it to do, even though it should calculate correctly. We got that one correct, and now we're going to just drag this down, and voila, we're done. So now it's all great to calculate these ratios and this information. It's another thing to be able to look at it and figure things out on what it tells us. So it has these questions down here. Which product line has the highest gross profit percentage? Well, this is really elementary, right? You just see which one is bigger. Is 55.6 bigger than 51? Yes, it is. So we would say that the apparel segment is, did I misspell it? A-P-P-A-R-E-L. It says incorrect. Are you serious? Which product line has the highest gross profit percentage? Which product line has the highest net income percentage? Well, we can clearly see that the equipment segment. Let's try putting in equipment. It still says incorrect. Well, I know I am correct. So let's just do this until it gets really angry. Maybe it doesn't like my okay, so it's wrong, but you see here that it actually was apparel. All right, so I type in equipment again. It says it's incorrect. Thank you. Let's try it again. Oh, we got it wrong, but darn it, you see that it is. Look, if you have the same problem, let me know. I don't know what the deal was. Clearly, it shows you the right answers now, but I was trying to type in the same exact answers, but it didn't like it. Maybe it just doesn't like my font. It's got font issues. I don't know. All right, on the last one that we're going to look at here, basically this is just looking at which ones are these ratios classified as. So like the equity ratio, what is that? Okay, it's solvency. Return on assets, that's profitability. So you come down here and you select it. Okay, dividend yield, marketed securities, market prospects is what that one falls under. Book value per common share, again, that's profitability. And then days sales and inventory, it would be liquidity and efficiency. I could just give you all these answers and basically just do your work for you, or I can let you at least do 6 through 10 by yourself. So I will let you do that. But either way, that's your homework to be able to do that. As always, if you have any questions, you know how to get a hold of me. Send me an email. But either way, that's it. And I wish you the very best of time, and we will see you in class.